Following a day of civil unrest here in Puerto Vallarta, Mexico, real estate investors have two main questions. One, has the market shifted? i.e., could I potentially get a much better deal on a property I've been considering? And two, how safe is my investment now? Could this happen again? Today, I'm going to dig into both questions so you can analyze your current investment strategy and consider your approach. Hi, I'm Diani Leal, real estate broker and investment consultant based out of Puerto Vallarta and Banderas Bay, Mexico. I represent Diani Might Investment Realty, which is brokered by EXP. If you're looking to buy, sell, or invest in property here in the Puerto Vallarta area, please don't hesitate to reach out. I would love to hear from you. All of my contact information is in the description to this video, in the bio to my page, and pinned to the comments to make it easy for you to get in touch with me. Before we get started, please make sure to subscribe if you haven't yet, if you like the content. It really helps me a lot, and it helps other people find me who may be looking for similar insights into international real estate investments and close-up knowledge on the Puerto Vallarta real estate market. So let's start with the first question. Have property prices dropped because of one day of civil unrest? With the amount of press and social media coverage surrounding current events in Mexico, and I'm recording this in February 2026, just to note, you likely know what I'm referring to, but I'll give a little context first, just in case. This past weekend, the Mexican government, with intelligence cooperation from the United States, carried out a targeted military operation to dismantle the leadership of one of Jalisco's largest organized crime groups. In response, members of this criminal group led coordinated acts of vandalism across parts of the country, including Puerto Vallarta. Burning vehicles, known as bloqueos, were set on several main roads, and some local convenience stores that are part of a national chain were also set on fire. The visuals were stark. And because the optics were dramatic and heavily amplified across media platforms, the perception can feel larger than the duration of the event. Peace was restored quickly, civilian harm was limited, and core infrastructure remained operational here in Puerto Vallarta. But perception, especially in a tourism-based economy, matters. So it's natural that real estate investors who were already considering a purchase are now asking, has the market shifted? Could I potentially buy that property that I was looking at a lower price? If something destabilizing happened, surely the market must have adjusted, right? Short answer, not yet. And here's why. Projections are ideas of what could happen in the future based on current data and circumstantial analysis. And statistics are evidence of what has already happened. Real estate markets do not react to projections. They react to statistics. Sellers don't lower their asking price because of headlines. They adjust pricing when they see measurable shifts, such as increased days on market, rising inventory, comparable properties closing at lower numbers, or multiple price reductions within their segment. That is how pricing psychology works in the real estate industry. Right now, we do not have that data. What we do have is a contained 24-hour disruption, and that is very different from a measurable market shift. Recently, I had a buyer in town, and he had made a first offer before the civil unrest event happened on Sunday. And the sellers did not accept that offer. They countered at a higher offer, and then the event took place. So he responded by asking me if it would be possible to revisit that first offer since circumstances had quite clearly changed after the event. So I called the listing agent and suggested that maybe their client would consider revisiting that. And he did not respond very well. He basically said, what I'm saying now, we can revisit this in a couple months. And also let me know that as a real estate agent, he had received several offers that same day and did not see the market necessarily being impacted by these recent events. So while I completely understand that logic, especially for somebody who was in the middle of all of the chaos and the panic and heightened emotions during this particular time period this weekend, but the truth is, experienced sellers do not react emotionally. They wait for evidence, and that distinction matters. So if you're looking to get a deal, you will need to wait. If over the next 60 to 90 days, we begin to see inventory increasing, property sitting longer, or consistent price reductions across comparable listings, then yes, we would have leverage supported by data. But today, right now, we don't have a trend, we have an event. And markets measure trends, not moments. That said, there's always a chance you can catch someone in a state of urgency or fear, willing to drop their prices as a direct result of recent events. Although, I wouldn't necessarily count on it. Now, let's talk about the second question investors are asking. Has the risk profile changed? This is where we have to think like investors, not necessarily tourists or emotional buyers. A smart investor doesn't necessarily ask, did something scary happen? They ask, has the structural stability of this market changed? There is an important difference between short-term volatility and structural decline. Short-term volatility looks like temporary road closures, heavy media amplification, and emotional reactions. Structural decline, on the other hand, looks like sustained economic shutdown, a long-term drop in tourism, capital exiting the market, and visible infrastructure decay. Puerto Vallarta is not experiencing structural decline. In fact, it remains in expansion mode. We have ongoing airport expansion, major highway infrastructure upgrades, billions in development in the pipeline, continued North American migration, strong cruise ship traffic, and growth in luxury hotels and branded residences. This is not a stagnant market. Let's zoom out for a moment and talk about political stability and infrastructure. Mexico has cartel-related volatility. That is not new, and it has existed for decades. The real question for investors isn't whether volatility exists. It's how the federal government responds to it and which cities receive priority protection and resources. Puerto Vallarta is a major tourism revenue engine for the country. It is internationally connected, economically strategic, and generates significant foreign capital. Cities like this matter at a federal level. Governments protect revenue centers. In this case, the response was rapid. Military presence increased immediately, and the situation was largely contained within roughly 24 hours. Airports remained operational, hotels remained operational, core tourism infrastructure continued functioning. That distinction is important, especially if you're an investor weighing the risk factor and ROI of your current or future PV property investment. Now, compare that to a market like Acapulco historically. Because of course my parents called me recently from their location in the United States and they were concerned, they wanted to make sure I was okay, because likely what they were seeing on the news there was a little intensified. And then my dad started telling me a story about a friend he had who bought property in Acapulco and then it lost its value and he was very concerned. So let's compare this to a market like Acapulco historically. Acapulco's decline was not triggered by one isolated violent event. It experienced years of underinvestment, aging infrastructure, declining luxury tourism, and economic stagnation before violence accelerated its downturn. And I mean violence, like human violence, not burning vehicles and corner stores. In other words, violence and unrest did not hit a booming, expanding market. It hit one that had already plateaued. Puerto Vallarta is not plateaued. It is actively expanding. Infrastructure investment is ongoing. Development pipelines remain strong. International demand continues. That represents a fundamentally different risk profile. Additionally, Mexico's strengthening economic and security alignment with the United States, which has been emphasized by this recent alliance against organized crime, increases the federal incentive to stabilize major tourism corridors. When foreign capital, trade relationships, and international perception are involved, response speed and resource allocation tend to increase. That's macroeconomics, not emotion. So while emotion may discourage an emotional buyer, An investor will examine these deeper macroeconomic components. Now, I want to share something personal because lived experience shapes how we evaluate risk. In 2018, I lived in Nicaragua during sustained political unrest. Not civil unrest, but a situation where the instability was directly tied to conflict between citizens and the government itself. At the time, I was running a non-governmental organization, an NGO, as a foreigner. So when political instability reaches a point where the government turns against segments of its own population, your risk calculation changes significantly, especially for me at this time as a visible foreigner leading a non-governmental organization. So your exposure increases, your protection decreases, and you begin evaluating whether remaining in the country is responsible. In Nicaragua, roadblocks lasted for months. Businesses shut down. The economy slowed dramatically. Tourism collapsed. It was sustained systemic instability rooted in political fracture. That is what structural risk looks like. And having lived through it personally, I'm very clear on the difference between that and what happened here in Puerto Vallarta this past weekend. This was not political unrest directed at citizens. It was a targeted federal security operation followed by reactionary acts of vandalism. The government was not turning against the population. It was actively intervening to dismantle organized crime leadership. And in this case, federal forces increased presence quickly and restored order within roughly 24 hours. Intensity in visuals does not automatically equal instability. Duration, institutional breakdown, and government hostility towards its own population, those are indicators of structural political risk. And that is not present at all here in Mexico. Puerto Vallarta experienced a contained security event. Daily life resumed, tourism infrastructure did not collapse. And for me, having lived through true political instability and having made the decision to actually leave that country while this was happening, because the structural risk had shifted so much, I can tell you very sincerely that I do not assess the current situation in Puerto Vallarta in the same way. I also remember advising a close friend at this time. It was actually a year before the political unrest happened in Nicaragua in 2017. I had already started my exit strategy because I was perceiving that things were going to collapse. And I had a friend of mine who said that he was interested in purchasing property there. And I advised him against that. He actually did take my advice, and of course he thanked me later when the collapse happened. Experience informs perspective. When you've observed early indicators of systemic instability before it becomes visible to the broader public, you learn to differentiate between headline volatility and structural risk. From an investor's lens, those are fundamentally different categories of exposure. So, in conclusion, have prices dropped? There is no measurable evidence of that yet. Could they soften if the data shifts over the coming months? Possibly. And if we begin to see sustained changes in inventory, days on market, or comparable sales, then we adjust strategy accordingly based on statistics, not speculation. Has the risk profile fundamentally changed? Based on what we've seen so far, rapid federal response, contained disruption, continued infrastructure investment, and ongoing tourism demand, there has been no structural shift. Markets do not rewrite themselves over a weekend. They reveal trends over quarters. If you're investing long-term in a growing tourism economy with expanding infrastructure, strong international demand, and federal economic priority, one day of unrest does not alter the underlying fundamentals. As always, I will continue watching the data closely because informed decisions should be driven by evidence, not headlines. If you found this perspective helpful, consider subscribing for ongoing Puerto Vallarta market insights. And if you're evaluating a purchase, sale, or investment strategy, my contact information is below. Please don't hesitate to reach out. I'm always open to having a thoughtful, strategic conversation. Until next time, bye.